Good morning, this is Robin Bieber on ChartTalk on the 4th of June at 6:55 in the morning London time. The chart in front of us is July WTI. At this stage yesterday morning, all the contracts less heat were hitting their targets higher. These targets were exceptionally strong resistance and where massive care is required, and it was doubly required because the 5-day gap was up at over $2 a barrel on Brent and heating oil and not far from those levels on the rest. When the 5-day gap is too wide, it's a massive indicator of an overcooked condition, which if you're hitting key resistances stroke targets at the same time is a very good reason to be careful. So yesterday's pullback from the target zones and slide was not altogether unanticipated. I must say I had expected to do better by the end of the day, but that's neither here nor there. The key was that yesterday the 5-day moving averages held on every single contract. In other words, the momentum for the uptrend was still intact, and the key today is what happens at the 5-day moving averages. They're going to be put under pressure, and if they fail, then what we're going to do is slide probably to the 8-day moving average. The key is what happens at the 5-day moving average initially today on tests of support, which is what is happening now. If the 5-day moving averages hold and the market rallies, then the key is what happens at the bull-bear pivots, which are the 50% correction points of yesterday's action. If we take them out, then the odds are a rally back to yesterday's highs stroke target zones. So WTI, what's this mean? Here's the 5-day moving average coming in around 36.31. We're very close to it. We've made a low at 36.38. If we hold this 5-day moving average, all's well and good, and we should probably then put the bull-bear pivot under pressure at 37.03. Over 37.03, and we run up to this key resistance, 37.60 to 64. There is no serious upside unless this line here is closed over. It's the 100-day moving average and top of the range resistance post-March dump. So it's a critical resistance, so shying away from it yesterday was not that much of a surprise. The worry is we've got now a negative stochastic. Not the most important thing in the world, it's outranked by the 5 and 8-day moving averages. But the 5-day must hold or we slide to the 8-day, which is around about 35.30. In other words, there's $1 in it if we don't hold the 5-day. The key levels, the 5-day moving average support and the bull-bear pivot at 37.03. And it's no different on Brent. Brent slid away from its important resistance and target zone yesterday at 40.14. That was the continuation 100-day moving average. Here it is. It's a bruiser of a moving average and very, very potent. It's at 39.89 today. So Brent, the key is what it does at the 5-day moving average around 38.95, 38.85 area today. That must hold. It's already been neared. But a failure to say hold 38.85 would take us down to the 8-day around 37.87. Like WTI, $1 in it. This is the key to the action initially today, the 5-day moving average on all contracts. If it can move back over the bull-bear pivot around 39.65, then it's got some upside to retest the area of 39.83 to 89, which is the 100-day moving average and the correction point. There is no further serious upside unless it can take out that resistance, 39.83, 89. But initially today, one needs to watch the 5-day moving average support, 38.85, and on a rally, if that holds, 39.65 bull-bear pivot. A failure here, down to the 8-day, $1, a loss of $1. A worrying aspect is just negative stochastic. But as I say, stochastics are outranked by 5 and 8-day moving averages in the pecking order. Heating oil never hit its target higher yesterday. The key now is holding the 5-day moving average around about 105.65. Must hold that or it's going down to the 8-day around 103.72. A move back over 107.12 would be gently positive, but it really needs to get over the bull-bear pivot at 107.71 to be running up to yesterday's highs. The stochastic is just positive, but seriously wavering, and if it was to go negative, you'd have some bearish divergence there. RBOB is okay whilst it's okay whilst it's above the 5-day moving average at 109.87 area. This is a key support level. There's a lot of support down from 109.16 to 108.85, and that would probably get tested. But on a failure at the 5-day, but a failure at the 5-day really is pointing us to a move lower to the 8-day around 107.50. It's critical that it holds that level. It would be deemed to be pushing back up if it can get back over the bull bear pivot at 111.35. It's printing around there right now. But RBOB, I suspect, will not drag the rest of the contracts higher with it. They all need to join in, such as the heightened state of the market up at these levels. So key is watch the 5-day moving average around 109.87 and watch the bull bear pivot at 111.35. Over 111.35 would be promising. It's still got a positive stochastic. Gas oil hit its target to 321.50. Here you can see on the continuation chart on the left where it is. It's slid back. It's just holding 307.50, an important support, but it hasn't even bothered testing its 5-day moving average around 301 at the moment. But if it failed at 307.50, then it's possible, very likely it would slide back to the 5-day moving average. It's in reasonably good shape, particularly whilst it holds 307.50. So the message here today is watch the 5-day moving average supports. They are absolutely critical. And watch the bull bear pivots. If the 5-day moving average supports hold, then watch the bull bear pivots on the recovery from them. If the 5-day moving averages hold, this uptrend is still intact, but it's calming down, cooling off, and heading for the 8-day moving averages, which are absolute must-watch, must-hold levels. Now, if we look at the 60-minute chart at the moment, it's not really telling us anything other than it probably wants to firm early in the London morning on the 60-minute chart on Brent. And if we look at the 60-minute chart on RBOB, yeah, pretty much the same. It's pretty middle of the road, but it's suggesting there's a little bit of room on the upside. And the back end structure, red deck, is okay on WTI whilst it stays over 243, and on Brent is okay whilst it stays over the 5-day at 347. So the back end, the deck reds are very much a microcosm of what the flat price is doing. Watch the 5-day moving averages initially today. That's all for today, folks. Good luck, good trading, and bon appetit.